So now we are going to start the first panel, the rise of growth equity, Romania, an emerging ecosystem. Because it's very important that a lot of specialists are here in National Romanian Opera. We will have a moderator. I would like to introduce her. She is a financial services professional with over 15 years of experience in private equity sector, other key roles in banking and audit and advisory industries. She focuses on financial services investments in her role as partner at Access Capital Partners, investment advisor currently advising its third fund with main investors international financial institutions. She holds non-executive board of directors roles in Patria Bank, Patria Credit IFN, and Patria Asset Management. Since September this year, she is the executive director of Romanian Private Equity Association. Ladies and gentlemen, let me introduce you, Ms. Daniela Iliescu.
Mrs. Camelia DRâng GOI, Mr. Omer TETIK, Mr. Marius GHENEA, and Mr. Adrian STÄNNCULESCU.
Ms. Camelia DRâng GOI is Senior Mandate Management Equity European Investment Fund. Mr. Adrian STÄNNCULESCU, Partner and Head of Romania at Abris Capital Partners. Mr. Omer TETIK, it's CEO of Banca Transilvania. Mr. Marius GHENEA, Managing Partner at Catalyst Romania, and Mr. Radu HANGA, President of Bursa de Valori București. Welcome.
Okay.
Ms. Iliescu, good luck.
Thank you. Good morning, everyone. We have here, I think, in the first panel of the forum, the key representatives of the main pillars of the financial ecosystem in Romania. With these important representatives, we are interested to discuss the key opportunities and challenges which have already been raised by the previous speakers, keynote speakers within the conference. On one hand, we will discuss about the opportunities occurring in the private equity and venture capital market. And on the other hand, we will definitely also discuss about the key aspects and key steps which need to be taken to improve the entrepreneurship ecosystem in Romania. Before going into the key topics, I would like to briefly introduce the panel members and to also say a few words about their background. Mrs. Camelia DRâng GOI, she's the senior equity mandate manager with European Investment Fund, having acted for 8 years since 2008, focusing on fundraising and managing public resources for equity instruments within EIF. Previously, she was investment analyst in a private equity and national coordinator for EBRD's SME program. In her current role, she's managing the Recovery Equity Fund, the fund which we already heard a number of information so far, having committed capital of 400 million euro to be allocated in the period 2022 to 2026 to venture capital and private equity funds in operating and having a national investment strategy. The program, as some of you already know, has started with a call for expression of interest in July 2022. Mr. Marius GHENEA, about whom we already heard a lot of information about his background. He's, I would say, entrepreneur from A to Z. He started with Flamingo, an investment from zero, which was grown to become a $50 million company, the largest CE distributor of IT products. In his current role, he's managing Catalyst Romania and has a track record of successful investments and exits from funds portfolio like Green Horse Games, sold to Tencent, Vector was sold to Fitbit and SmartBill.ro, sold to Visma, but also companies where he was founder or business angel, such as Flanco, Viking Profile, and PC Garage. Adrian STÄNCULESCU, he has a strong experience in private equity, investing in medium enterprises. Adrian has joined Abris Capital in 2014. He's currently managing the Bucharest office of this regional fund and investment advisor. He's responsible for originating and leading investment opportunities in the region. He's chairman or member of the supervisory boards of PEHART, Green Group, Dental Holding, and Global Technical Systems, and Hyperfi. Last but not least, Mr. Omer TETIK, he's the CEO of Banca Transilvania since 2013, having had let's say, the opportunity or the merit of taking Banca Transilvania to #1 leadership position in the local banking system. With its logo, the Bank of Entrepreneurs, I think he's a key person relevant for our forum, having succeeded to take Banca Transilvania to one of the largest CE banks, a bank listed on the Bucharest Stock Exchange, with also providing products and financial products and services to most of the entrepreneurs in Romania. Having heard the challenges and the key issues raised by previous speakers, I would like to ask our distinguished panel members to first talk about their role and interaction within their organizations with the Romanian private equity and venture capital ecosystem. And I would like Mrs. Camelia DRângOI to start.
Thank you, Daniela, for your kind introduction, and happy to be here along with the distinguished colleagues in the panel. Our role at the EIF is to catalyze, and I think it's a bit of a, feels like a bit of a family reunion 10 years later, because exactly 10 years ago we started the Catalyst Fund, aptly named, and of course having Banca Transilvania as one of the, or the main private investor. And at that time it was our first foray, together with the government of Romania, using structural funds into financing private equity and venture capital. I'm not sure that we even know what the rules were. Probably we were still discussing them as we started, but in any event, we managed at that time. It was very difficult to start. It was when we started the first selection, it was on the, let's say, on the tail of the previous large financial crisis. But nevertheless, I think this was a successful project. And based on that, let's say 5 or 6 years later, we were entrusted with increasingly more resources by the government, which we used to create 4 more funds. And now, 10 years later, from the launch of our first fund, we have what we can call a quantum leap in the resources that we can bring together to catalyze the local market, not only with the famous Recovery Equity Fund, which is a 400 million euro project financed from PNRR, but also through the good news that from the first Jeremy initiative that we started at the time, already we are starting to use reflows, money that we received back, and we have begun to entrust them to new equity funds. And so this will be a sort of an evergreen project that will continue until the money dies out. You know, if our fund managers do well, then it will never die out. So our role is to catalyze, and very happy to be having this role on the Romanian market.
Thank you.
So, as mentioned in the introductions, during the past, let's say, almost 30 years, I wore a number of hats that have to do with the VC and startup ecosystem. I started as an entrepreneur just out of university, together with 2 of my former university colleagues, the usually garage startup, and it turned out to be a market leader in Romania, and then across Southeastern Europe, by the year 2000, so around the year 2000. And then I went on to operate as a serial entrepreneur, as a business angel, and eventually as a venture capitalist. So I've been on both sides of the table, if we can call it a table, where the two sides, you know, the entrepreneurs, the founders, and the investors sit opposite, hopefully not divergent, but just on different sides of the table. So I've sat on the side of the table where we were working as entrepreneurs with various private equities and venture capital funds from the region back in the 1990s and then in 2000. And then later on, I became an investor myself, developing a portfolio of companies, first as a business angel and then as venture capitalist. Put together, it's more than 30 companies that I've been involved in so far, most of them indeed in technology or tech-enabled verticals, but also in other areas such as manufacturing, distribution, logistics, services, and other media, other types of businesses. And I'm really very happy that there is this sort of 10-year jubilee of the first Romanian VC fund that we also sort of celebrate on this first edition of the Romanian Venture Forum, and also I think it's great that we have this type of finally we have this type of money from European sources that is coming in or going into companies, but then coming back, and not only coming back 1x, but in our first fund case, certainly coming back with in multiples. So we're not talking about those grants that sometimes work, sometimes they don't work. We're talking about equity that is actually coming back and being able to be recycled and even create a snowball effect. And the snowball effect is actually twofold. There is this one thing that, our first fund, as we are the first second generation fund in Romania with Catalyst Romania Fund 2, our first fund generated returns that can be reused, recycled by EIF in future programs. But even more, from the first fund to the second fund, we were able to mobilize much more significant private resources. I'm very proud to tell you that our Catalyst 2 is arguably the fund that is mostly funded or majority funded by private money, even though the initial assumption was that EIF, through these mandates, would be the majority shareholder and funding partner of Catalyst 2, but eventually, with partners again like Banca Transilvania, but also like high net worth individuals and family offices and other types of Romanian investors, we've proven the fact that there is a way to even mobilize more than 50-50 private resources in Romania, which was, as Camelia may well remember, which was a big question mark just a few years ago, and certainly 10 years ago, fundraising for private money was really a big challenge in Romania. Still, as Horia Manda mentioned earlier, the pension fund pillar is still missing from the puzzle, and that's not good. But hopefully this will be addressed in the near future. But I see there is more and more interest and opportunities to get funding from the private investors in Romania and in, let's say, our smaller Southeast European region.
This is a great news.
So, thank you for the invitation and for the chance to be here among you. I'm honored personally, and on behalf of Banca Transilvania, definitely. Our role is definitely different as compared to the investors, business angels. We have, although I'm very happy to hear the speeches of Horia Manda, of Mr. Minister, that at the end I see that entrepreneurs, politicians, central administration, banks, we started looking a bit forward, because usually when we gather in such panels or forums, we cry about what we have missed, what we didn't do, what didn't happen in the last 30 years, and then we go home. So now we started speaking about what can be done. The fact that private equity VC ecosystem development was maybe low in Romania, it's a great opportunity now. And it was actually, that was our thinking when we met first time with Marius on that issue for Catalyst, because I wouldn't assume the whole joy and responsibility of making a good decision. At the end, it was also a very good investment, but it depended a lot on their perseverance, tenacity that they were presenting the idea. They definitely the trust and the character and EIF's presence there. We were always, as a bank, also complaining that Romanian companies, private companies, are not well capitalized, so that they and they are not open to guidance, mentoring, advisory services. So it was a good moment that most of our complaints had been addressed with this structure, which, as I said, in turn became a good investment. But still, we are doing this, I don't know, baby steps or penguin steps. We cannot assume the role of an investment bank. Although we are developing now the necessary know-how and structure under BT Asset Management, our asset management arm, to be more and more involved, our first steps were putting some skin in the game, which wouldn't definitely endanger our normal business, because at the end, we do business with other people's money. We invest other people's money. And we said that, okay, it should be a small fraction of our profitability or equity, shouldn't endanger our lending capacity or servicing capacity. But we have seen that both the interest and the amounts had been growing. We have seen a lot of benefits. We are also one of the main partners of different private equity platforms and funds, financing acquisition of companies, financing working capital or investments of the companies managed by them. Sometimes it was, especially after the last financial crisis, after 2009, 2010, it was an opportunity for us for the workout or turnaround of companies when competent people were coming to manage businesses with a different view, instead of us running to recover our money, whatever the cost is to the community, to the business, to the future of the business. So I would say we are mostly a beneficiary. And I'm glad that we had been from the very beginning in the story. But from now on, I can also commit that we will be as committed and interested in the subject. We are also a listed company. Development of capital markets is a key matter for us. We had been always advocating this. That's why anything that could help Romanian economy, Romanian entrepreneurs, capital markets, Banca Transilvania will maintain its commitment and involvement.
Thank you.
Hello, everybody. Thank you, first of all, to the organizer for the invitation. It's great to see the venture fund starting. It's a sign that this segment of the overall venture capital private equity ecosystem is developing. We saw a lot of funds coming up in the last 2-3 years, 4 years. It's a great sign. I cannot be more happy than that. We should provide more deals for us. Some of them would probably end up on the private equity transaction table at some point. So I think this is a great sign of the maturity of the segment. Maybe saying a few things about us at Abris. I'm with this firm for 8 years. We are a typical private equity fund investing out of our 500 million euro third fund. We invest in more mature companies, that's true. But in this part of the world, mature is slightly different than what it is in the Western European part of the world. We tend to be quite a lot involved with the companies and with the management teams, developing their expansion strategies, supporting them to accelerate the growth. So I think there is a blurring line between these segments, and I think in some sectors of the economy, the line is even more blurred. We invested in Romania in the last probably 10 years, somewhere between 200 and 300 million euros. We exited some of this, but most of it is still invested in the market in these turbulent times. It's not the most comforting moments, having a lot of investments in operating companies along the volatility that we all experience in the business environment. So this is a challenge, and I think we will be continuing to invest out of our fourth fund that should come somewhere next year or the year after next year sometime. And we are maybe saying a few things about how we supported, I guess that was the question, how we supported the local environment. Probably the best way would be to say a few words about the investment. You mentioned, Daniela, about the investments. We have investment in the circular economy. This is actually a holding company of various circular economy companies that expanded from Romania in other countries of CE, Slovakia, Lithuania being one of the two of them, and we plan now to develop them further in these countries, but also other countries around the region. So we really believe that Romanian companies can become definitely local leaders. This is where we want to play, but also regional leaders in CE, and I think we have good examples. Another example is a dental distribution business. We acquired few companies in the space, both in Romania and Bulgaria, and starting with a very, very fragmented market and building up a 30% market share, more or less, in each of these two countries, and a lot of consolidation, integration between the teams and cultures. I think this is something that Romania has as an opportunity, and the local companies can develop regionally. We strongly believe in that. Looking around and seeing the examples of other countries like Poland, that because of the size, they could kind of accumulate capital and then invest in their companies so they expand regionally. I think if we look at the other end of the CE region, Romania being one of the main countries in terms of size and size of the economy, I think we have the right ingredients to do that. And happy to have started this development, this strategy, and looking forward to see others doing that more often. So that would be from my side. I'm not sure I addressed exactly your question.
Perfect.
But
it's perfect, and I think it's a good opportunity to move on to the next question, on which I will have a focused discussion. I would like to ask Marius and you, Adrian, since you mentioned about the fundraising activity. I would like to ask you, what is your view on the current fundraising conditions in the local market? Since we already heard about one of the key reasons for the slow development of the overall fundraising and local private equity funds and private equity teams. What has been your experience so far, Marius, or what is your current experience? And what is a little bit your view also looking forward in the next 1-2 years?
In terms of the recent experience, of course, I could probably talk about a couple of things. One is obviously the fundraising for Gale's Romania Fund 2, which ended up at 50 million euro. And actually, anecdotally, that was the cap of the fund. We had additional commitments that we simply could not welcome because of the contract of the fund being signed for a hard cap of 50 million euros, which actually made me think that maybe next time we'll put a bit of a more, how should I say, a privilege, a luxury issue to have. So in that respect, I would say that fundraising went extremely well, but I have a few things that probably could explain that quickly. One is that we are a team that not only has serial experience in terms of investments, because our Fund 1 was already, in carry, and we had already investors that we have worked with in Fund 1, and obviously they wanted to work with us in the second fund. We had, for instance, a number of very successful exits, and obviously the founders who exited together with us, as VC is usually normally associated with minority participations. Obviously, whatever we did in terms of actual exit values, the founders did multiples of the money that our fund made. So basically, each of these founders was very happy to participate with us in the next fund, so to recycle at least part of their returned equity, let's say, into our next fund. So that also helped, and eventually Also, I think we captured a time frame where there was a bit more of a positive sentiment of the investors than maybe would be right now, because our fundraising ended just before the start of the war in Ukraine. So maybe we also caught or went through the right time. But as I always say, you need to be in the right place at the right time with the right product or the right offer or demand. If the case be. And the other experience that I have, which is actually a continued experience, so I can talk of it real time, is the one with Seedlink. As some of you might know, Catalyst Romania Fund 2 is the lead investor into this last Series A round in Seedlink, the largest and most vibrant equity crowdfunding platform and let's say emerging investment platform from all the region, and expanding across Europe with a recent acquisition in the Netherlands, in Benelux, a platform that was already authorized by the Romanian FSA for ECSP, for equity crowdfunding service providing. And I think, if I'm not wrong, it's one of the first 4 or 5 European platforms to be authorized, because the legislation, as you certainly know, was recently passed in Europe, and some of the countries have not yet authorized such service providers. And with Seedlink, we have this real-time feel about the investor sentiment, because we have listings, crowdfunding listings, every day or every week. So there is a lot of activity there, and we see the type of reaction that we have usually from our retail investors. Tickets in Seedlink are 2,500, maybe to 5,000 euros. Some of them put 10,000 or tens of thousands of euros, but usually it's this kind of retail investment level and crowdfunding type of investment. And we see that moving up and down. And what I can tell you, again, maybe anecdotally, war in Ukraine broke, and next day nobody was there to invest. Then later, that was February, then later in August was it, Putin announced the mobilization, and next day nobody invested on the platform. But it's like, we see these peaks and troughs.
Emotional.
Yeah, which are more emotional. Yeah. Now, what I've seen, and this is very encouraging, is that after the end of the summer and the beginning of fall, which were kind of sluggish in terms of the investor interest on Seedlink in particular, and in other contexts, we have seen the interest increasing again significantly, and November, December were again very populated, not only with companies asking to be funded, but also with investors interested to offer funding for these companies. So in that sense, I would say that the experience on both ends, so the more sophisticated investors from Romania, family offices, high tickets, hundreds of thousands or millions, and that was Catalyst Romania Fund 2, and retail investors, small tickets like the ones that are operating on Seedlink. I think we are despite the general context, I think we are in a good shape right now.
Thank you. Optimistic view.
Optimistic view. Let me give you the other view. We are not now, just to kind of set the background, we are not now in fundraising, so it's a bit of let's say, usual discussion that we have with our investors to get the feel for the sentiment, but it's not a concrete discussion that we are holding now with our investors about fundraising that should come next year sometime. So I might not have the very precise views on their willingness to invest. I would classify the investors in 2 categories. You have the financial institutions that are dedicated to the region and have to invest in the region, and I think there's definitely a lot going on this front, very active, promoting, and I think this is helping a lot. On the other hand, another segment of the investors are the commercial investors, as we call them, and they are market-based funds of funds, pension funds that have a strategy to invest in this asset class, and not only, but also in this asset class around the world, or some of them with specific strategies for emerging markets, which means that Romania or even the CE region is not a must for them. And we hear from them quite a lot of worries or worrying views, especially from the more from the US based, given that from maybe that distance we are in a war zone still, and that means that they are a bit more cautious in moving because they don't have to allocate money to the region necessarily. So if they can wait, they will wait. How long, we will see also next year. It's not only the war, it's also the volatility and the impact on the European economy as a whole. I think this is something that I would say the US investors are worried more. How Europe will do overall as an economy and the companies there. So then you have the European ones that may be a bit more close to the situation. So they are willing to invest. I would say uncertainty is probably the best way to define it in their views. We will everybody waits to see how next year will play out as we go out of the winter period. But I think on the other hand, twisting a little bit the pessimistic message I have, it's that this investor have more and more capital that they need to deploy. And this is a big driver and it cannot be stopped, fortunately. So we should all probably consider this a temporary let's say, caution on their behalf, but they will come back into the markets as probably the next year will unfold. So we'll also see firsthand in as we start our fundraising. We were in a fundraising for maybe not exactly as a fund, but as one of the portfolio companies that we have. We were in a fundraising started actually in January, and then we had February events, and we continue over the summer. So all the feedback that I just described from these investors is coming also from trying to raise equity for one of the portfolio companies.
Co-investment, you mean?
Yes. Which was it's still going, but now in the last stages, so it was successful. And I think this is the triage that we had. We had a lot of investors that liked the sector, but they were far from the region, so they said, let's wait a little bit to see what's going on. And we had investors that liked the sector and they wanted to accelerate, so that's how we just selected some of the most determined ones and got this through the finishing line. So I think there is a mixed bag of views from the investor side. It's just filtering them and allocating your resources in the most efficient way. It's probably the most challenging part of the fundraising overall, I would say, even for startups, to know to whom to talk and to where to spend the energy, because there's unlimited ways you can waste your energy.
Thank you. Since we are talking about fundraising, I would also like to ask the other two members of the panel, Camelia and Omer, to talk about a little bit the other side of a financial intermediary. We were discussing with the financial intermediaries funds, which collect money from investors to further invest them into SMEs and companies. Whereas now I would like to hear some feedback from, as I said, Camelia and Omer, about how they, in their capacity as investor, assess the investment teams, the fund managers in which they invest. What are the criteria they look at besides the usual main financial criteria, risk, return parameters?
I mean, from the EIF perspective, we are, of course, the leading venture capital limited partner in Europe, which means, therefore, that we are the leading recruiter of venture capital teams. So what we are looking for is people. This is a bit different from, let's say, the classical or other types of financial intermediation. We are looking for teams of people that show the capacity to execute. We are looking for the same things that the funds are looking for when they select the companies in which to invest. So that perhaps explains the fact that, because this is a people investment, some of the people who perhaps have submitted an application to the Recovery Equity Fund, they're thinking, why the hell is it taking 2 months or 3 months or 5 months for me to get a reply? The process is very thorough and consists in the evaluation of the people that are submitting an investment proposal against what they are trying to do, what is the strategy, what is the budget with which they are trying to achieve this. So it all has to be synergetically combined, and we have to truly believe, together with the equity investment colleagues, that this is an equation that's likely to work for us in the long term, which means also, of course, that those people have to get along among themselves, which is not always the easiest things, especially when you're talking about new teams. So we are looking for teams that can execute a strategy, and happy to say that in Romania, through the programs that we have worked on together, financed from public resources, most of the teams that we have financed are new teams of professionals who are not even in Romania, some of them. Another part of them were simply doing other jobs or working in other funds. So I hope that we have also catalyzed a little bit this portion of, let's say, human resources or capacity building, and not only through a financial contribution.
Great.
Yeah, I mean, it's indeed, as already mentioned, there is, especially since the beginning of the war and all the economic changes, public crisis that we are facing now, liquidity and cash became more expensive, both emotionally and financially. I mean, it's also people want to hold on to their cash. We also see even in our customer base, they prefer making short-term deposits, although a 1-year deposit pays much higher interest rate. They still want to make steps of 3 months. And regardless of, how to say, although you said that the return on investment is a given, I shouldn't focus. At the end, we are looking for this magic potion where the investments can bring stable, high return on investments. On the other hand, as Camelia also said, the most important thing is the track record that we are looking at the management teams. And then if those people can find other teams who can manage businesses which are being acquired, it's not just about the potential of the business, because we as bankers, we are like that Swiss knives. I mean, we do a bit of everything, but actually we don't know anything that well as an entrepreneur, as an investor in its own field. That's why we are looking for professional people who can assume, who can bring, who has some track record. Now it's easier because 10 years ago, it was much more difficult to discuss about the track record. Now, after investing in Catalyst, after investing in ROPEA, Morphosis, and some others, we know where we can put our depositors' money, which higher comfort. But again, as mostly even in the credit decisions that we take, first the competence, character, personality of the people that we are looking for.
Thank you. It's a brave, I think, role that you took as a bank, as a commercial bank, also to invest in private equity, in venture capital entities to further support the entrepreneurial environment. Speaking about the entrepreneurial environment and the SMEs, as Mrs. Ramona Chiriac mentioned, indeed SMEs are considered the backbone of the European economy. We have, they provide employment, develop job creation and support innovation, and have a significant contribution to the GDP. In Romania, SMEs contribute to approximately 53% of the GDP creation on an annual basis, whereas in European Union we see the same percentage, around 57%. And at the same time, SMEs cover around 65% of the jobs in Romania versus 67% of the jobs in European Union. These are great numbers. There are positive news if you look at the similarities between the structure of the economy in Romania and European Union. However, there is another very important statistic which shows a great discrepancy, which I believe was mentioned earlier in one of the keynote speeches. I'm talking about the gap in capital, whereas the European SMEs are well capitalized and entrepreneurs have good access to capital. In Romania, based also on, if you look at the National Bank of Romania and other statistics, we see a gap of 33 billion euro at the level of equity of local companies. This, I think, is a good opportunity, a great opportunity actually, for the private equity and venture capital industry to cover some of this gap and to identify investment opportunities. On this note, I would like to ask some of the key of the panel members to share with us their views on how did they support the entrepreneurship and the development of the SMEs in the local market. Marius, can you please start
Sure.
sharing some of my thoughts on this topic?
Sure. Of course, capital is very important. Equities is very important. However, I think there is a more fundamental problem that we need to address, continue to address in Romania in particular, which is that entrepreneurship, like everything else, needs to be learned, needs to be understood, needs to be practiced with proficiency. And this is something that, comes or should come from education. So before, talking about how we finance a company, we should see founders, teams of entrepreneurs and managers who are capable to understand their own financials, to project their own financials and budget for the future, and only then they could go and seek financing, be it debt financing or equity financing. And in terms of education, we have this big gap, which is starting from the education system. We are, told constantly in school that we should not experiment, we should not take risks. So basically that we should not be entrepreneurs one way or another. And then it's very difficult to come back later on in life and tell those people, yes, you can be entrepreneurs and you can do things, but you need to study, you need to educate yourself on entrepreneurship, and particularly for entrepreneurs, financial education would be an important thing that is missing at the moment. And on that one, what I've tried for a long time, with modest resources indeed, was to try to help with that kind of education in various programs that I organized, co-organized. I've tried to catalyze in terms of other people being part of these programs for entrepreneurs, entrepreneurship courses, financing financing management programs, and ways to finance your company. So this is something that I've done either individually or together with my colleagues from Catalyst, or together with other professionals and consultants in the market. And I think this is something that needs to continuously be done in Romania in order to have more savvy and more educated entrepreneurs, and thus to have probably entrepreneurs which will understand even better the necessity of getting capital, getting equity, getting the right type of financing, and the balance of debt versus equity financing in their companies. Because we also have this problem that even when companies are getting significant equity, like in the case of our investments, equity investments from our fund or other venture capital and private equity funds, the founders are still relatively resistant to the idea of getting this kind of bank leverage or other types of financings attached to this increased capital base, which is not wise, because you can only develop quickly and at full potential if you are getting a harmonized view in terms of your financing, and not only base yourself on equity or solely on debt, but rather on a combination or on a good mix of the two. So I think, again, what I've tried to do, and hopefully with probably 2,500 to maybe 3,000 entrepreneurs that were cumulatively along the past 15 years through some of the programs that I've ran around entrepreneurship and entrepreneurial education. All these thousands of entrepreneurs, I hope they learned a bit and then they went on and developed their businesses quicker and more efficiently using the information about how to finance the business, about how to build a team, how to look at the market, competition, product development, market development, and so on and so forth.
I think it's our role as investors indeed to disseminate this information, not only, as you mentioned, through the training, educational programs, but also through the actual experience. And this is also our role to present success stories.
Yeah, and indeed, if I'm allowed just a few seconds more, I think that what we are doing constantly, because we are investing, for instance, in 15, 16 companies through the whole investment period in a fund. 4 years, we get to 15, 16 companies with a fund like Catalyst 2. But to get to those 15, 16 companies, we're actually talking to hundreds of companies, hundreds of startups or early stages, and even those where we are not investing in, we are trying to help and educate, and we keep in touch with the founders, with the entrepreneurs. Sometimes we go back to them, or they come back to us 3 years, 4 years, 5 years down the road, and we do an investment maybe from our subsequent fund, but in the meantime, we're trying to help them and educate them to some extent when they sometimes either have no clue or are confused about things related to financing, related to what's the role of financial instruments, what's the role of debt financing, and so on.
I mean, if I may say, I will also challenge a bit. It's good to have the European statistics or international statistics and compare ourselves. But I'll say if I don't know, Elon Musk or Jeff Bezos would be sitting next to us, somebody could say that people on the stage have on average $30 billion each, but actually they have 200, we have none. So it's that's why we should also look at the maybe Romanian realities. If we put the standards for SME at European level, 50 million euro turnover, 250 employees, actually suddenly we are an economy of SMEs, and suddenly 90% of the companies' contribution to GDP is coming from those SMEs. We are going to, we have to accept that actually our SMEs are micro companies for Europe and
for developed economies.
Yeah, that's also our business approach, and we are trying to find ways to support them. Beginning of COVID, beginning of the pandemics, and at the beginning of the war, there were lots of consultancy papers, research papers saying that SMEs will be disappearing. In COVID, they proved that they have more resilient than we think. These days, they are also struggling to prove again that they are more resilient. But there is also something that you and Marius mentioned. Well, I guess entrepreneurial education should start at the school level by teaching our kids the tolerance for failure, because we are mostly very upset on success of others. We are upset on banks' high profits. If somebody has good performance, we are criticizing. When somebody is failing, it's lynched by the public. I mean, we as a bank, we are budgeting NPL ratios, cost of risk ratios. Actually, we are formalizing how much we will fail. Yeah. So it should be the general criteria set up in the culture, in the mind of people, so that because financial education cannot be done just by only growth, only complacency, without having failures. We should also see. We should learn from failures.
You learn from failures actually more than from your successes. Adrian, please.
Yeah, maybe a few things on how we supported the SME environment. We invest in the SME market. Okay, it's a broad definition of SMEs. Sometimes when you talk to people in France, the companies we invest are small. When we talk to people in Romania, the companies we invest in are very large. So it's a broad definition, but in a sense that's defined, I think we are in this space. I would say even on the upper level of the SME, there is still the same characteristic at the slightly smaller level because of the lack of the maturity of of the market. So that's not that much difference between a company that runs 100 million with a company that runs maybe 20 million revenue. We see the issues that they faced tend to be not identical, but very, very similar. So one way we supported the ecosystem is that most of our investment went into capital increase, so building new factories mostly, or developing and hiring people in a more accelerated way. That would be a direct way of supporting. An indirect way of supporting, and when we give exits to entrepreneurs or partial exits, this money, from our experience, most part of them goes back into the local economy. For some reason, they are linked to that, to this economy. They become angel investors or real estate investors, and in the end, supporting the SME market, and which is really encouraging and rewarding after all, because all our efforts kind of tend to stay in the country. So that's one thing. And in these small investments that they do, they tend to be mentors for others, and we saw that they do it with success, trying to mentor other entrepreneurs become successful and growing their companies. I would say the most I like building on what Marius was saying before. A lot of the support that we see, or where our effort goes, because when you deploy money, it's, I would say, probably around half a year when you analyze the company and explain this to your committees, and then the money go into the company. But then you have many years, sometimes more than what you expected initially, working with the management teams, with the banks, with the advisors, with various people, with the recruiters, trying to make these companies better and let's say build a structure, build a system in the company that's able to grow faster, or to basically manage a much bigger business than when we entered. And I think it's very difficult to kind of quantify that effort over 5-6 years, as usually we spend with the company in monthly, weekly discussions, trying to bring in our know-how, our expertise into these companies, and also learn back and take this expertise from the management teams and entrepreneurs back into other companies that we invest. So I think all this cycle is pretty difficult to quantify and explain, but I would say apart from the money, which is hard and you can count, there is another part that cannot be counted, and I think it's equally important.
Thank you. Speaking of companies and entrepreneurship, and since we have this forum also organized by two important entrepreneurship organizations, and we hopefully have also some entrepreneurs here in the audience, I would like to ask Marius and Adrian to say a few words about what do they think should entrepreneurs do in order to be ready or to qualify for a capital investment decision from the funds you are managing.
I will try to get that very short, because I understand we are kind of out of time. So for entrepreneurs, obviously investment readiness implies a number of things. One is that you need, as you've heard here, you need to have a team that can be trusted and can be entrusted with investors' money, or with money from coming as debt from banks or other financing institutions. So that's the first and foremost, a team. And this is one point where in Romania and throughout the Balkans we have this problem of a lot of individual entrepreneurs not really understanding the kind of risk they present to investors when they go as solitary entrepreneurs. As investors, we like to see teams, and we can expand on that, why teams are better than solitary entrepreneurs or founders. Secondly, put your house in order, so you need to show us that the company is somehow well organized, managed. You understand your business, you understand your market, you understand your product, you understand your customers, you understand your competition. So these are a few essential things that you need to prove. And particularly for VC investments, I have this 4 Ps of investment readiness. One is obviously the people. I started with the people. Then we're talking about the product. Okay, so we need to have a good product. Then that would be the potential. So basically, what's the scaling potential of the business? Because as opposed to maybe some later stage investors, we need to see that those companies are growing very quickly. And finally, of course, we have piață, the market, let's say in English. So these would be the main criteria for an investor to invest.
Yeah, I'll try to be quick. I think what Marius said is very true also for larger investors, investments, larger companies. I think the team is critical. We saw companies that got to quite a sizable level, but without the proper team, they couldn't continue. And if you don't continue growing, at some point, someone else will do in the same sector, and you'll start decreasing. So I think that this is probably very, very important, especially in our part of the world that has a relatively recent management culture. And I think this is, I cannot stress it more how important this is. So I think entrepreneurs should focus on building the culture in the company and also the team, and not to be dependent on themselves. And then understanding the market and the operations, it's obviously something that they do well if they are successful and they come on our radar. What I think it's missing, and maybe not really obvious, is to be open. So if you want to have an investor at the table, or it's kind of a partnership, usually rather long-term partnership, you have to be open about other opinions and listening and also implementing. Not trying to just take the advantage what you like as an entrepreneur, just the money or just access to certain things. I think openness, if it's not there, it's probably better not to do a VC or PE investment, because it's going to be much more difficult afterwards.
Openness creating trust also. Thank you very much to all the panel members for their insights into these topics. I would have 2 takeaways. I think the venture capital and private equity market are set to grow since we have significant opportunities of money and capital being ready to be invested into these venture and private equity teams. On one hand, and on the other hand, I think investors should continue their role in educating the SMEs and the entrepreneurs, and in understanding that actually, as you mentioned, Adrian, financial investors are partners to the entrepreneurs in supporting them achieving their business plans. Thank you very much for the attendance.
Please, a big round of applause for our speakers from the first panel. Ms. Daniela Iliescu, Mr. Marius GHENEA, Mr. Adrian STâng Culescu, Mr. Omer TETIK, and Ms. Camelia DRâng GOI. Thank you very much.